Hello, today we're going to talk about some basic concepts in managerial accounting. Very, very basic, but a very, very fundamental, important concepts. So to start this class, let's talk about some language we use when we communicate, telling people how hard it is for us, right? Sometimes when you buy stuff, people ask you, how much does it cost? We tell them, hey, this thing costs $10, this pen costs me $1, or this thing costs maybe $5, those things, right? So when we are talking about these, we are talking about monetary value, right? But sometimes, for example, I don't know how many people bought from IKEA, right? Like for in my case, my wife says, okay, is it complicated? I will after day, I will probably tell her that hey, it costs me like 3 hours to make it, but not so frequently. So in accounting, in daily life, I think when we are talking about costs, we are more likely to be referring to dollar value because we are thinking how much it costs us, right? In accounting, it's kind of different. When we talk about cost, when we talk about costing, we are really talking about what resource has been consumed. You see, for business to grow, right, they have to have different things, right? For example, for oil and gas business, their resource includes machinery, includes cash, includes human labor they will pay cash for, and then when they are maintaining their pipelines, everything includes those materials, whatever for maintenance. So those are all costs, right? And if we want to make a calculator like this, to make a calculator for a company that makes calculator like Test Instrument, for example, to them the cost to make this doesn't only include, for example, the visible parts material we have seen, and do not only include the human labor involved to put things together. It also potentially includes the machinery they use to assemble everything, right? And it also includes the salary paid for people to put the different things together, assuming it's not fully automated yet. So when we talk about costs in accounting classes in business, we have to have this idea. When we talk about costs, it's about how much resources has been consumed to convert the shape from raw material to some finished goods that we intend them to be. Okay, so that's the first thing. And when we really talk about costs, we have to keep in mind. So those resources, right? So those resources we can include different things. We have a Chinese restaurant in front of this neighborhood. The boss, the couple, they're friends of mine. So sometimes the guy sometimes tell me that, hey, Joe, I'm really exhausted. I don't understand, right? I work every day so hard, right? We do make money. We have a lot of clients, loyal clients, customers, but we do make money. But I feel so exhausted and not worth it. But I look at the costs, I look at those costs, look at the money I make, I feel that I should not feel so. So I told him, okay, I said, look, right, look, Ken, I know I told you to change to some other products, right? Because what you are doing now takes you a lot of time. Material wise, they are making from flour, some meat, whatever stuff. They don't really cost you that much. But you are doing some complicated cuisines all manually, and they take you too much time, and everything has to be made fresh. You have to come here every day at before a.m. every morning and then leave at very late. And when you figure out your costs, do not exclude your labor cost because you think you are the owner, the money is going to go to you anyway. You have to include your own labor to think about whether it's worth it or not, or whether some products are worth it or not. So he took my advice. I think he's been adding some new cuisines and gradually retiring some cuisines that it takes too much time. This is another cost factor application manager accounting. But hey, that's for the later application, right? So talking about those basic concepts today, right? Some guys probably see this already, right? You know, who this, right? This is the famous Wall-E presented from Lego, right? I'm not taking any promotion money from Lego, and this set has been retired already. So I know a lot of people like Wall-E, including myself, and seems to be selling Wall-E is a good business, right? Those things, eBay can be sold around that. I think maybe I'm not surprised to be seeing it's going over 100, about 150, even in this condition, right? So to do this, right? So I come up with an idea, for example, right? I said, okay, you know what? I'm gonna having a company, and a company only sells Wall-E. Right? So what do I do, right? So my products will be like this. They are about, I think, 8-inch, 10-inch tall wall-E, really cute, friendly to other people. But to do this business, what do I need to have, right? I need to have some raw materials. I need to have different stuff to sell these, right? And probably my wife would not like me to make our home business place a manufacturing workshop. So I have to find a place. So I have to consume time to do this, and then I will see I will make money on it, right? So I have to include everything, okay? So to do a business, right? I know how much it could potentially be sold already, and I know after my research, I know how many customers I'm gonna get, right? So for me, the managerial accounting side, I need to have some idea about the potential costs that it might be incurred, so I can figure out whether it is a good idea to do it, whether I can afford it, and how much money I might be able to make, or how many units I have to be able to sell to survive. Okay, so let's continue. Right? So about Lego, we know already, right? So when you do this, you have different pieces, small pieces, and it takes fun, right? To put everything together, right? To put everything together. Well, that's why I'm doing it. That's my wife do not like it. So be careful if you have those time-consuming, money-consuming hobbies, and make sure your future significant half is okay with it. So I do my research. I figure out, you know what, right? To sell this lovely robot that big, everybody loves, right? I need to gather. I did my research. I figured out what the resources may take me, and those going to cost. Of course, originally going to be cost my money, but those how much it's going to cost me to make one. So I have an idea of the cost perspective of everything, right? So first, I did the research, right? For each wall-E, it's going to be 8 pieces about each unit, right? And each piece is going to be 5 cents. So material-wise, I'm saying that to make each wall-E is going to probably cost me 40 bucks per wall-E I can sell on that, right? I make each wall-E it costs me 40 bucks material. But does it really take me only 40 bucks, right? Imagine, right? And now it's only myself, so I have to charge. I'm a labor, so I gotta be paid also by myself. And then later, if my business goes really well, I have to hire other people. So I have to figure out for those people how much I pay them, right? And then for those things, I need to rent a place, and I might have, that even although Lego is pretty good, but sometimes when you buy from Lego, they come with missing pieces, and it's always nice to keep some spare parts just for rainy days. And then there's other costs. So let's take a look, right? So this is a material cost. This is a material cost I talked about, right? Here. And we call this, we will figure out names later, right? And after that, I figure out if I'm doing it, my rate gotta better be $50 per hour, right? And it takes me about 30 minutes, maybe more, or let's say 30 minutes to make one. So in here, the labor cost, direct labor cost for each wall-E is gonna be about 21 bucks each, right? Ignore the typo here. And then for me to have spare pieces, right? Because it's very difficult. There's no definite numbers how many a set will be missing, how many pieces will be missing from a set. Mostly 0, sometimes 1, sometimes 2, everything worse. So let's say I did my estimates. So to buy those spare pieces, if I make fast enough, every month spare pieces may cost me about 50 bucks, okay? And then because I rent place to assemble wall-E, again, you don't want to make your wife angry, okay? So I rent a place. The rent per month is going to be 1,000. It's a nice office, assuming, right? Nice table, workshop. So it's going to cost me 1,000 bucks, right? And after that, for the workshops, the utility, because I just pay, I'm subleasing it from somebody, so they charge me 200 bucks per month, maybe with cable, with water, with whatever, but it's for production only, okay? So then, again, for my wife, right, to pay the protection of the business, right, every month from my profits, I pay wife 40% of my profits, right? Again, it's an important thing, what I learned to make the family go smooth and everybody happy, okay? So I'm looking at all these costs, right? And so let's analyze those costs a little bit, right? So what about the 800 pieces at 5 cents each piece, right? We know they are direct. What do we mean by direct? Because we can pinpoint the cost to each unit, right? So they are direct. We know that it's 800 pieces at 5 cents per piece. So we know exactly for each employee, it's going to be material-wise, it's going to be 40 bucks each, right? And what about the labor? My rates, it's kind of direct too, because we know for me, it takes me 30 minutes to make one. And I know my rate is 30 minutes per hour. So assuming I don't take a slack, I don't go, careless, everything. So for each employee, the labor is going to cost 25 bucks. All right, 25 bucks. And it's going to be, again, can be pinpointed back to per employee, right? So those two are direct costs. And from this, we know that to make each employee, direct labor is going to cost 25 bucks. So direct material is going to cost 40 bucks. So together it's going to be 65 bucks. So there's no way I will sell my employee below 65 bucks, because then I'm at a pure lose. I'm losing money, right? But we have others. Can we sell at can we sell at a little bit higher than 65? Then it's really difficult to say. It depends on how much I can sell, because for the following reasons. So if you look at the spare pieces, in case anything missing, per month cost is $50. So I don't know how many will be missing. It's just an experience, right? So for this cost, I cannot really pinpoint to each employee, because I don't know exactly how many pieces will be missing. So this is treated like indirect cost, because we cannot pinpoint. So this one is indirect, but it's still part of the production, because it's go exactly to the employee, right? So this is indirect, right? This we have first a take, right? So we cannot pinpoint it to each employee. So let's say, right, no matter how many you make, it's going to be about 50 bucks each month, enough, right? And also the rent, right? What do we about the rent? Can we really pinpoint why to each rent when we estimate? Then we cannot. Sometimes if I can make more, sell a lot more. Sometimes if don't sell anything, landlord don't care about it, right? They will keep charging. They will keep charging whatever stuff. No matter I sell 1 million or I sell just one or sell zero, right? So again, we cannot really pinpoint 1,000 rents to each how we allocate to each employee, right? So this is indirect, but it's for production, because the whole place is rent only to make employees again, right? So workshop utility for the same reason, no matter how many I make the same, we cannot really pinpoint. So this is, this is again indirect. We cannot pinpoint. All right. So if we think about this, right, for the the last one and the last one, the 40% family happiness fee, or you call it production. The 40% family happiness fee, or sometimes people might call it production under other scenarios, right? It has nothing to do with production. Right, because it don't only go to employee, whatever stuff. It's just my managerial. My management has issues, right? So to make managing go smooth, right? We have to pay this. It might be part of the company cost, which I make employee production company, but it's not really about production. So it's more like a period, right? It's more like a period cost. It's not linked direct or indirect to production of employee itself. So if you look at this, we identify a couple components, right? For the two blue ones, one is direct labor, one's direct material. This is part of the major costs, can be pinpointed. The second, we call it part of direct labor. This is part of production costs. It's direct because we can, again, pinpoint to each one, right? And the following orange ones, the three orange ones, they are indirect. They are more like happening during the period, regardless of how many units. And they are not really direct related to the manufacturing employee, but we know that they are about the production, because the place I rent is solely for production employee, right? So, and the parts is only used to, in case any employee is missing pieces, I use as spare pieces, right? So those are about production, but they are not so direct. So we have a name for that. We call them overheads, right? And the fixed, we know there's nothing to do with it. So those are the employee costs we talk about, right? So far for me, why it's important, and we can see that of each employee, we know 65, 40 of which is direct material, 25 of which is direct labor. So the direct costs add up to 65, right? Add up to 65. And the other indirect, right, cannot really be allocated to pinpoint to each employee. It's going to be add up to 50 plus 1,000 plus 200 is going to be 1,250 bucks, right? So if I can make more, if I can sell a lot of these, meaning that because the costs are fixed, right? So if I can sell more, even with the same markup for each unit, I can still make money. On the other hand, if I can only sell one each month, right? Even if I price the unit of WOE at 1,000 each, right? Which is crazy, nobody will buy. Even if I can sell it to some crazy people each month by one unit, you can see that I'm still losing money because although I mark up a lot, but it's not enough to cover everything, right? So here's what we're gonna know, okay? And of those, we can talk about which costs are important. Of course, all the costs are important. But which costs are easier if you run a business, right? You know the costs. You know the costs for the purpose of managing the costs. Neither do not waste anything, make sure everything is efficient, right? So which costs are more likely to be easier? Which costs are easier to handle, to manage? Direct material, direct labor, the two direct costs are easier to manage because we can pinpoint, we know exactly how much each unit costs, and if there are any numbers off, we can quickly figure out whether it's because somebody wasting too much material or somebody do not work carefully, do not work efficiently, and we can deal with that, right? And then regarding other pieces, spare pieces, the rents, workshop, it's not really as the workshop utility, it's not really as manageable as other parts, right? Because you have to negotiate with other people, and sometimes when you have a better month, they might cost more, extra pieces, sometimes less, right? Sometimes rent goes up. It's difficult to tell. It's difficult to tell. So for the two manageable costs are definitely important because how can you make anything without labor and the material, right? So we call them prime costs because they are important. They are more important than the other or more manageable than the other. Okay, so direct labor and direct material, they are our prime costs. And on the other hand, right, if we visualize, right, when you have those raw pieces, you know, a lot of guys that go to IKEA, you bought those raw materials that people, right? People do this because they get a feeling of they are building something, although we are just following instructions. So if you look at this, right, this WOE is actually starting from those pieces we saw already, we knew already, right, from those small pieces, right? So how do we make them, right? We rent place, we add a different costs, right? We spend the time and we adding more material, sometimes like extra pieces. So what's gonna happen is we make them a complete presentable WOE here, right? So what we are essentially doing is we are converting some raw materials from the very basic pieces, very basic shape into the shape we want, right? So we spend extra time, extra piece, we spend labor, we have those rent places just to make raw material, the things from the raw material shape to the finished goods presentable shape, right? So here, so what we call is we are spending time and other resources to convert some plastic pieces into WOE, right? So there's what we call conversion costs. What are conversion costs? Conversion costs are labor costs and overhead. We talk about three orange parts, and then including other stuff not directly related to not directly related to production. Okay, so those are the other things I want us to know, right? So prime costs, direct labor, direct material, conversion costs, direct labor, plus overhead. And to do business, you know, to do business, if it is a stable big business, I cannot just, for example, when I receive a customer order, I start to make it. It's gonna be not gonna be efficient because if we think about it, right? If today 100 people wants it the next day, then I can surely not deliver it. And the next day, for example, if there's nobody wants it, then I don't do anything. I'm wasting too much time, right? Because I have to have an idea of what's expected sales each month. I got an idea, and I have to make it every day to make sure every day is goes smooth, right? And to do that, we need to have enough supplies. If you run out of supplies, then you gotta nothing to. You have to wait for days for it to be delivered, right? And it might cost you even more. So when we talk about supplies, we are talking supplies of raw materials, right? And also every day I'm making, if you think about it, every day, every week, every month, when I'm making it, some are still raw material I haven't touched it yet. Some will be halfway done, right? We call it working process, and some will be finished. Okay. And so every month, if you look at the balance, you will see that some are still different pieces untouched, some are still like different blocks, some are down, a head, a body, those stuff, right, a claw, and some are just there, right? And then every month, right, at the beginning, and because, for example, by the month's end, right, I might think about every month, the first day of the next week, some people gotta pay, some people will buy. So by the end of each month, I should still have some completed YE unsold in case somebody wants it on the first day of the next week, right? And some have been sold already, and some I'm adding it. So for my business, right, I need a lot of different pieces laid out there because those are the pieces I use to build my voice. And every day, every month, I start building. I build a small halfway down. This is for the torso, and there will be for the head, different things. But it has to go through this, right? You always finish from scratch, and then you start somewhere, and then hopefully at the end of the way, it's going to be turned into a complete voice. So for my business, we are touching 3 inventory accounts already, right? Raw material, which are like this, and the WIP, working process, which can be different stage. As long as you started, even you just put on a leg or just a hand, right? That's still WIP, somewhat done over there at a different stage. WIP is a little bit more complicated. It can be 90% down, 10% down, 20% down, 1% down, 99% down, okay? As long as you started, it's not finished, it's called WIP. And the third category of inventory is, of course, finished goods. Finished goods are the ready products what we sell to the end customers in our perspective. And so from raw material, I will add labor, I will add some extra pieces, I will have to rent places, whatever stuff. So we have raw material with all other inputs. We will go to working process. Okay, we are going to working process. And then working process, I keep adding material, right? I keep adding material, I keep adding labor, I keep adding other stuff. So we're gonna have our finished goods, right? So those accounts might seem a little bit complicated, but at this stage, let's introduce another very, very important accounting concept. And this my theme's universal. My theme's interest is too easy from the beginning. For each period, each period can be 1 day, 1 week, 1 month, 1 year, right? For each account, raw material, working process, finished goods, we have beginning balance for each account, okay? Beginning balance plus addition, subtract, reduction, give us an ending balance, right? Or end balance, ending balance. So what do I mean by this? Without touching, So for raw material, like we said, at the beginning of each period, right? Because I have to show me I have enough supplies to meet customers' needs, right? So I must have some raw material so I can start making one. So in the beginning balance, I have some material already. So in the months, I have to keep purchasing. And then meanwhile, because I'm still making, some materials will be used to make wood. Like I said, maybe WIP, maybe eventually finished goods. So a reduction becomes the materials used to make voids, right? Addition becomes the new pieces I bought, right? So beginning balance, beginning pieces plus the pieces I bought over the period, and I subtract the pieces I used, we will have any balance of the raw material. This is for material, right? And for working process, it's the same, right? At the beginning of each period, I look at my workshop. I say, okay, here are the how many, what's the value of those WIPs I have stuck with, which I started but I didn't finish, right? So over the period, I will keep adding different things, spend the labor to make new WIPs, right? Because I will always start new WIPs, new projects. So there will be addition to the WIP accounts. Of course, in the same period, I will make finished ones, right? I will finish different voids, okay? So for those finished, once they are finished, they are not WIP working process anymore. So they will be removed from WIP accounts. And so here we have beginning, which is at the beginning of the period, which I started but didn't finish, right? And then reduction over the period, I must have finished some, right? Addition, I must have to start some, right? So we will have any balance of WIP. See that? And for finished goods, we follow the same logic, right? Like I said, every month we have to leave some finished goods there, no matter which business you are in. You have to leave some unfinished goods there in case somebody makes a quick audit, right? So each period to begin with, I will have some finished goods more easier already. And over the period, I will keep making, right? So how many employees I made during the period will be addition to the employees I have available for sale, right? And then I will sell some, which is a reduction of the finished goods employee account because I sold them to other people. Then the ending balance of finished goods will be how many employees I left in my warehouse so I can prepare for the next period, okay? So what this equation can tell us, right? For the finished goods, I will talk about two important concepts, okay? One is called a cost of goods sold, and the other is called a cost of goods manufactured, right? So how are they different if we think about it, right? I guess the name speaks for itself, right? Cost of goods manufactured is because how many employees you made in this case during the period. Cost of goods sold is how many employees you sold and how much to make them, right? So cost of goods manufactured may or may not equal to cost of goods sold. Cost of goods manufactured might be bigger or smaller than the cost of goods sold, right? If you sell more than you made, then you end up with a lower balance than you begin with, right? If you sell less than you make, you made too many, but you sell little, so meaning that you will have more employees by the end of the period than the beginning of the period, right? As long as we figure out what is addition, what is reduction to this account, okay? Let me use one last example to finish. So allow me to use one last example, which everybody understands to finish this, right? When we talk about cost, manufactured, beginning balance, addition, reduction, and ending balance, we can think about all the our bank account, okay? So I'm sure for a lot of financially conservative, I'm sure for a lot of financially conservative accountants or future accountants like you, hopefully you have some plans for your spending stuff, right? So if we think about it, every month, let's say today, this is March, right? On March 30, sorry, on February 29th, the end of February 29th, you have certain amount of cash in your bank accounts. So the beginning of March 1st, that's the same balance you have, right? It's the same. You haven't got time to spend anything yet, unless, right? So, and then every month, you will make some money from your job. You know exactly how much your boss pays me, okay? You know exactly how much your boss pays you. And every period, you will spend some on food, on gas, on hobbies, on unnecessary needs and necessary needs. So let's say by the end of March, you look at your bank account and you realize you have 1,200 left in your bank account. And you know that at the beginning of March, you had 1,000. So by the end of March, you have $200 more than you began with, right? What does it mean? It means you spent $200 less than you made. Does that make sense? So it tells a few things, right? And if you began the month with 1,500 bucks, but you ended up with 1,000 bucks, what does that mean? It means you spent more than you earned, than your employer, your boss paid you more by how much? By 500 bucks. Can we see that, right? So for example, if I begin my warehouse by beginning of this month, I had, for example, 50 employees in my warehouse, right? And then I made 100. So I should have totally 150 available for sale, right? Remember, 50 beginning balance, 100 is how much I made during the month, and then I have 150 available for sale, okay? So if I sold 80, which is less than I made employees, right? So I should end up, my ending balance of employees should be 70 units, right? Because 70 units is more than 50 by 20. Why? Because I sold fewer than I made by 20, okay? And on the other hand, if I had a 50 to start with, and then I made 100, but I successfully sold 120, what does that mean, right? 50 plus 100 give me 150, right? So that's available for sale. So if I sell 120, meaning that the ending balance when employee left in warehouse by the end of the month should be 30, which is 20 fewer than beginning units by 20. Why? Because I sold 120, and 120 is more by cost of goods manufactured by 20, right? So which means I didn't only sell everything I made, and I sold 20 from the beginning balance. Does that make sense? All right. So there are simple interactions which we're gonna present later when we have some calculation stuff, mathematics issues to do. But so far, this is a concept. So keeping in mind, right? Direct costs, direct labor, direct material, overhead. What are these? Right? How do we define these? And what are prime costs? What are conversion costs? Right? And also try to apply the equation we just talked about: beginning balance plus addition plus subtract. Sorry, beginning balance plus addition, subtract, reduction, and imbalance. What does that mean? I apply this to YE, I apply this to my YE business, which is of course not there, and also to my to the bank account story. Now, I will encourage everybody to relate it to life and observe it to make the knowledge really of yourself. Okay. So if you have any questions, just feel free to ask me. And this is the class for basic concepts in managerial accounting. Thank you very much.